money. So what do we do as investors? We're invested in the stock market, right? S&P 500, the Dow, the NASDAQ. We're also invested in tech stocks, right? Mutual funds. We have money managers. We have certified financial planners or advisors like Jeff Kimball. And we invest, why? Because we want to make a profit. We want to make a return back on that money, right? So thank you so much, Jeff, for the introduction. We just simply want to say we're 16 months old. We're coming out of our infancy and our startup. We're actually in our growth stage now. And I just want to talk a little bit about education, okay? It's paramount, it's critical, and let me focus on that. So first of all, I come from a corporate career of 20 years, and during that tenure, I was an executive consultant, and I managed large multi-billion-dollar enterprise initiatives. And so what that means is that I did a lot of strategic planning, I built very talented teams, and then I moved people through project lifecycle processes to the point where we actually deliver services and products. Behind my tenure, I had 2 undergrad degrees, excuse me, I also have my PMP, Six Sigma, and I recently got my North Carolina Professional Broker's license, okay? And so I come from a place of education, so does my husband. He has 2 undergrad degrees, and he's been in the financial services industry, just like myself, for 26 years. So together, we have 46 years of financial experience. That is our experience, okay? And that's very transferable into real estate. Those of us in the room that love real estate, which I know Leslie and Mindy, we absolutely are passionate about it. It's in our blood. It just makes us. We think it, we breathe it, we live it, right? So what I want to talk about is if you don't have education and then you don't have the experience to put together and put action behind it, you will not be successful. Your education and your action allows you to be successful. We bring that financial success to you. So with that, we just talked a little bit about our family. Yes, we got 5 kids. And so everything that we do in our life is so relationship based. And I can say most everyone in this room, your company is based on your relationships, right? Are they not? Mm-hmm. So here's the deal. I can tell you everything I can about the investment side of the business, but you know what? If I don't sit down and I don't make that connection with you and you don't trust me and I don't build that credibility, we have nothing. And you're gonna walk away and be like, yeah, whatever. She doesn't know what she's talking about or they don't know what they're doing. So that's gotta be coupled with a lot of results. So you gotta establish that credibility and that trust. And that's how we form our partnerships. So we're basically here to educate you today. We got a lot more information to move through. I'm gonna move through it very, very quickly. But we're here to make sure that you as investors sitting in this room, that you understand that you can also create passive income wealth for yourself. All right, so let's talk about the market real quick. And Mike, you're timing me, right? All right, market. So here's what I want to say. If you look around, the economy is performing well. Well, out of real estate, we know that it's driven by supply and demand. So on average, we have around 60, you girls probably know this better, ladies, but we have around 60 that are moving into the greater Metro Charlotte area, right? And so what we have is we have high demand and low supply. So that means we don't have enough housing. Well, drive around. Look at all the things that are being developed right now, right? There are tons of development, housing that's going up, mixed-use development, right? But that is really driven by population growth, our real estate market, right? There's a lot of economic factors that go into it, but it's primarily driven by the population growth. Well, right now today, you can look at any market trend report, and U.S. renters are making decisions to continue to rent. Why? Why? They have the power to buy, but they continue to rent. And the reason behind it is because it's a convenience, amenity-driven society right now with all this multi-use development that's going up. So you got your apartment, then you can swing out, you can go and do your shopping, you can go and do your what? Well, whatever else you can eat. Everything is convenience-driven. So with that, what we want to say is the stock market, on average, produces, historically, on average, a 10% return. And then they accommodate for the inflation of about 3%. So you get a total net 7% historically average from the stock market. That's why you invest. Well, guess what? You can also invest in real estate. Why? It's a complement to your investment portfolio because it's a hard, tangible asset. right? It's a hard, tangible asset. It's real property, and it produces lots of income streams. So with that, all right, I've talked a bit about who we are, you know, the market. Let's talk about how we do it. All right, you guys, you got keys, right? Put them in your car, you put them in your front door, right? Put that key in, you turn it, and what's your expectation? Door's gonna open. What?
It's gonna start.
It's gonna start, it's gonna open, right? That's what we are. We are a turnkey real estate services company. So that means we are a one-stop shop. We do everything acquisition and everything syndication. Acquisition simply is this, guys. It's complex. It's really complex. And there's a lot of moving pieces and parts. It's big. Sourcing, underwriting, closings, etc. Managing of the asset. The acquisition piece is multi-phase, multi-stepped. It's very complex. We simplify it. We bring that. We also do syndication. That is a really fancy word to say that we raise money. We raise private equity. We raise capital. And so the way in which we do that is we do it according to the Securities Exchange Commission. Those laws, those rules, regulations. We have an SEC attorney that helps us structure every deal. So we bring the acquisition, and we bring the syndication, and we bring those together. We marry those two, okay? All right, next. All right, so how do you make money as an investor? How do you make money? Well, I heard cash flow come from Dave Pennington today. We know what Jeff Kimball does, right? There's others sitting in this room that own their property. They own commercial property, right? Your business owners. Well, you make money 4 ways. The first way you make it is cash flow. What is cash flow? It is basically the ability of the income that the commercial property produces. So it's income that the property produces. That's cash flow. 2, depreciation. What is that? It is an investor's best friend. Why? Because depreciation is basically a tax deduction. It's a tax benefit for your percentage in the investment. Appreciation. What does that mean? Well, we go into these properties and we do value adds. So that means we put capital improvements, right? We put money into the investment, into the asset, and we raise those rents, okay? And that helps appreciate the value of the asset. Amortization, we got Andre in here. I don't think I saw Rick today. They know all about this, right? This basically is the ability to leverage debt. So we leverage debt to expand our buying power. So when you get a mortgage, you pay it down, you pay it down, you pay it down, right? And then you create equity. We take that buying power, we refinance, and do it over, and over again. All right, investment services. So as I already talked about, we're here to help you create passive income wealth. That's what we do. And then we're going to give you your cash back on your initial investment, your cash flow, and then when we resell the property. We protect you in an LLC. Everything, again, is according to our Securities Exchange Commission and ensuring that we're in compliance with that. And we also do tax deferred change options, 1031s. All right, so we're going to take a moment and we're going to make this a little bit more fun and interactive. How much time we got?
You got 2 minutes.
Okay, so we're going to go over probably 2. All right, so with that, my husband Don Scott's at the back of the room. So let's put on our thinking caps. Let's go.
All right, so we're playing a game of deal or no deal. This is a property that we looked at recently. It was a 29 unit. It happened to be fully occupied, which is nice. It was 17 1-bedrooms, 12 2-bedrooms, and it's a value add. So when we look at the property, you know, first of all, it needs to be making money out of the gate. But second of all, we look at how can we raise the rents to increase the return to our investors. Part of that is getting the rents up to market, and the other part is called value add. So a value add, we go through and it's like, well, if we upgrade the units, you know, make nicer flooring, this or that, can we raise the rents and get a better return for our investors? So on this property, they're asking for $1,950,000. We offered 1.4. That would have given you a cash-on-cash return averaging out of 10.8. Cash-on-cash is basically if you put $50,000 in and we give you a return of $5,000 the first year, well, that's 10% cash-on-cash. And then you'll have a different one for each year. In this case, averaging out over the years is 10.8. The second number we really care about is the internal rate of return. So as Robin said, when you're investing your money, generally you're thinking stocks, mutual funds, bonds. And I had a college professor that said, you know, the stock market averaged 10%, and that includes your bull markets, your bear markets, your bubbles, your crashes, everything over time, averaged out. So when we look at a property, we're looking at internal rate of return. We want to look for 12% or higher, and if it doesn't meet that, we just move on to the next property. So saying that, on this property, if you put $50,000 in, we have different exit strategies, but in general, we consider we're going to hold it for 5 years and then we're going to sell it. You know, a lot of it depends on the market, depends on the property, a lot of variations into the exit strategies, but just in general. So on this property, if we held it for 5 years and you invested $50,000, your cash flow in year 1, 2, 3, 4, and 5 that we would pay out to you would total $27,000, a little over $27,000. And when we sell the property, you get an additional, you know, a little over $9,000. So at the end of 5 years, we return your initial $50,000 plus you would have made another little over $36,000. So you'd have an equity multiplier of 1.73. So basically, for every dollar you give me, I'm going to give you back your dollar and another 73 cents. So looking at this property,
Deal.
deal or no deal? Exactly, deal or no deal?
Deal, yeah.
Deal. Deal.
Yes.
Deal? Deal. All right, great. So we went through that really fast, but I'll just let you guys know that underwriting and analysis takes a lot of time. What we would like your help on is this. Great referrals for us are going to be accredited investors. So what does that mean? It basically is this. You have $1 million or more in net worth, or you make $200,000 a year, $300,000 jointly, and it does not include your home. We prefer accredited investors in our deal. However, we will consider sophisticated, right, Dave? We will consider sophisticated, and that basically is under $1 million in the net worth. So that's just the threshold difference, okay? But we have to have a built, sustainable relationship with sophisticated investors, because typically they're not in real estate yet. All right, we're looking for small, mid-size, large. Small is $100,000 or less as equity in the deal. Mid is $100,000 to $500,000, and large is $500,000 and above. I'm proud to say, and I'm excited, that we actually have investors in the small and the mid-size, and we are right on the cusp of bringing in a larger investor. So kudos to our syndication efforts. So I'm proud about that. We also look for small business owners, so people that are in their profitability, their growth stage, not their infancy, not their startup. Y'all know what that's like. That takes a couple years. We're looking for small business owners, also commercial brokers. I invited a few today. I didn't see anyone show up. I don't know if I scared them away. But what we're looking for is to form partnerships with them, because we need them to go and be our buyer's agent, okay? We need them to go and find us assets, 20 to 120 units out there, okay? And bring those opportunities back to us. Commercial real estate attorneys, I wish we had Bobbin, is it Bobbin? Bobbin come today. With Southern Law Group, but why are they important to us? Because they sit across and close big commercial deals, and they have great commercial connections into those investors. Also, our I just said the commercial lenders. I haven't said that yet. Commercial lenders. Why are they important? Because they're the ones that form our equity debt structure. They give us the loan. So it's really important to have those relationships. They're very critical resources. So again, you can help us with small business owners, commercial brokers, commercial lenders, what else? Property managers. I'm already working with Franklin. If you don't know this gentleman over here, Steve Miller, again, he's Matthews Town Commissioner, excellent, brilliant businessman, and then Dave Campbell, he's one of our private equity investors, so glad to have him today. All right, so we're not going to take any questions. We've run over. If you would like to sit down and talk with us, we'd like to learn about your investment goals and schedule a meeting with us. Thank you, everyone.